The condo market in the Greater Toronto Area could see some significant challenges. TD Economics just dropped a bomb on the industry, stating that prices could decline another 5 to 10% from where they already are. I'm inclined to agree with them, even though prices have already been dropping for a while. I'm going to talk about why in this video. The first chart that they show illustrates quarter-on-quarter change in the GTA benchmark condo prices. Most notably, prices have already declined for 5 consecutive quarters, signaling a persistent downward trend. The second chart is where they illustrate their forecast. They project a continued decline in condo prices with an anticipated drop of just over 8% in 2025, following the 5% decrease in 2024. So if you thought 2024 was bad, TD believes it's going to get a lot worse. In 2023, we saw a decline of just 1%. But you add these couple of years together, and the cumulative drop from 2022 to 2026 will be in the neighborhood of 15 to 20, if not 25%. One of the biggest reasons why they think this is going to take place is because they've seen slowing population growth. Chart 3 shows quarter-on-quarter change in Canada's seasonally adjusted population. We have seen a deceleration in population growth in Canada, which contributes to reduced demand in the housing market, especially with non-permanent residents who are tenants of these condo units. That puts downward pressure on rent, which their chart headline here says Canada's rapidly slowing population is a red flag for rent growth. And we are already seeing the impact of this. I mentioned that this would happen a while ago when the Bank of Canada observed this strong correlation between year-over-year inflation and rental prices and year-over-year population growth in their monetary policy report in January 2024. Shortly thereafter, the Trudeau government cut the foreign student, which I felt was a move for them to get ahead of a data point that hadn't been released to the public yet, which was that international student enrollment was dropping. And now we've seen international student enrollments actually drop by like 70%. And so they wanted to take credit for that economic shift by making it look like a policy shift. Similarly, we saw them do the same thing with temporary foreign worker applications. People stopped applying because the economy hasn't been good and the jobs aren't good. The news is out that there's this false promise of Canada's immigration system right now. And to jump back to this TD Economics report here, their chart 5 talks about this job market where it states that a weakening job market spells trouble for condo demand and shows that they expect a continued decline in Canadian employment levels through Q2 and Q3 of 2025. The Canadian Real Estate Association put out Toronto employment trends, and then Toronto's unemployment rate charted here. You can see a really big spike. It's one of the highest unemployment rates at a municipal level in Canada. So unemployment is high and rising in Canada. And their monthly full-time job growth rate, you saw a huge drop off in April of 2025. Chart 6 shows retrenching condo construction should ease supply pressures, especially in 2026. So basically what we've got is a year where we're going to have record condo deliveries this year. 40,000 maybe units closing this year, 25,000 next year. And 2024 was a high year for condo closings as well. So you have a ton of brand new condo closings taking place. I pulled the data on this new unit pipeline from Altus and Zonda, who both put out reports separately on the new unit pipeline. They each have different estimates based on what the builders told them about when those units were actually going to be closing. I just averaged the two. But you can see we have a record year of high-rise and low-rise closings. According to the Habistat here, we also have, and the Habistat is TREB's data, Toronto Real Estate Board data, we have a record number of active condo listings on the Toronto Real Estate Board. So you have record brand new supply and a record resale supply in the market right now. This is going to keep the market in a buyer's market. Buyers can shop around. They have tons of product to choose from, and that should gradually continue to push prices down as they exercise that right. They start to negotiate with sellers. They start to try to get better deals. TD's argument here is that once that supply tapers off, once you get past that record year, they have these condo completions. This is a year over year change. So basically the chart that I just said, just broken out into quarterly year over year change. And they're showing how starting in Q1 2025, we'll see that number start to actually decrease. So we won't be completing more units in that quarter than the year prior. This is kind of where I disagree with their analysis. I don't think that this retrenching of condo construction will ease supply pressures. 6% of the entire market of supply is under construction right now. If you look at the 12-month rolling average of multifamily building permits, the big push the government's been doing for purpose-built rental has materialized in purpose-built rental actually being built. But this means that this supply scarcity, this idea that supply is just going to drop off or taper off, isn't necessarily the case. This analysis comes from Ben Rabideau on Twitter, and I sent it to the lib.rent team for a video we're working on. What this tells me is that a lot of future demand for these apartment-style rental units, high-rise apartment-style rental units, is going to get backfilled by purpose-built rental development where condo development has failed. And so for me, the way I see it is the model is just shifting. Before, you used to have condo developers who would put a bunch of units on the market, and those units would be absorbed by end users, foreign investors, mom and pop landlords, whatever, and they would deliver those to the condo rental supply or apartment rental supply and sort of decentralize the ownership. Honestly, I actually think it's been bad for the market because you have a lot of absentee landlords, whereas now we're moving towards a larger institutional corporate landlord structure where you have bigger buildings, professional landlords, purpose-built rentals where you can't just evict people for your own use. Above 3 units, you can't evict a tenant for your own use. So we're moving a lot more towards this like Europeanized housing model where homeownership will continue to decline and condos will play less and less of a role in the housing ladder than they have in the past several years. You don't see a lot of first-time buyers buying them to build equity to step up to a new home, or there's a declining share of that. And I think that this will kind of be that last wave of first-time buyers buying condos to get on the housing ladder. We simply haven't been designing condos for owner occupiers. We've been designing them to keep the price point low so that foreign investors, landlords, domestic investors, et cetera, would buy them and then rent them out. And this was the easiest and most efficient way for us to get housing supply created. It's a very broken system. And I would argue it's a way to get housing supply created that has a lot of negative externalities, but it did accomplish the goal of getting housing supply created. Now we have a better way of doing that through purpose-built rental. And I expect that the government will continue to put their eggs in that basket.